Good morning, everybody. It's Christopher from Serene Education with the 4 major news update for the 16th of November 2012. Hi, guys. Let's have a look and see what happened yesterday and see what's going to happen for the last day of this week. Okay, so daily, what happened yesterday? Upside. Okay, after initially seeing resistance, I did say we did need to see price actually breaking higher than this 12,700, finding support, and we would definitely see price heading up towards that magical institution moving average, or the 12,8300. You can see quite clearly now over the past couple of weeks, price has fallen, and the institution moving average has also fallen with price. All the moving averages are above price, acting as resistance, and you can quite clearly see on the daily that the strategy template is positive. However, near term, we're having a pullback in play. The one thing we need to see now, if the institution, which happened to be a major support for price over the past 2 months, will it now be a major resistance? Breakout, pullback, resistance under price support becomes a new resistance, and price should fall to the downside. Things are stacking up this week on Euro. Everybody striking, running around, burning things in a lot of countries throughout the world, well, in Europe in particular. And yeah, not very happy with austerity measures, and that's bound to happen. A lot of people are unhappy with what's required of their states, and yeah, they're showing their emotions. So will that affect price on Euro? It's likely to be seen. We did hear this week that the Euro has gone back into recession since the first time since 2009 when it first went in. So the double dip, very much apparent, and let's see how that plays. Ideally, if we're going to see this now being a new resistance level, you want to see a nice bearish engulfing candle. Another close below 1275. If we do that, then that sentiment will generally target 1260, the 1245, and the 1230, which happen to be a major support and resistance level in the past. So look for that resistance level above price. And there we go. My 4-hour chart, I've made a note of that. You can quite clearly see the 1283 there is my major support and resistance level above price. And you can see on my 4-hour, we have a high price swing here. There we go. So I take my lower swing. If I can just grab this line, thank you very much. There we go. If I just take the wicks, you can quite clearly see that last 4 hours has tested this area, and we are now seeing price now hugging the upper end of this candle. So it's trading above the 50% line of this candle, the candle range. And if it remains to do so, then we could see potentially price now finding support. And if we do see price finding support, then there's more likelihood for price to actually bounce. If I do a quick fib retracement from the low to the current high on this time frame, the 4-hour, you can quite clearly see that the 50% line is in play. If I take the whole range, i.e. from the low that we had recently to the high, you can quite clearly see the 23.6 has just been broken. So trading into 38. So 38 and the 50 are a major support and resistance level. So make a note of that, guys. Take a note of that particular line here at 1275, funny enough, and mark that out on your smaller time frames. 1275. There we go, 1275. And that 1275 is above that consolidated range that I drew yesterday. Look at that. Fancy that, guys. So, trading above the box breakout, fantastic. As long as it stays above the box breakout. And look where it's trading now, at the upper side of the institution on our intraday time frame. So that's a good sign. Major resistance yesterday. I said to you the only thing that's going to actually cancel this exhaustion candle here was a bullish engulfing candle. Sure enough, we got it, closed, found support, and traded higher. Pull back over the Asian session. Has seen price reversing to the downside. It now needs to actually use a prior resistance level as a new support, 1275. Notice the last hour indecision, the doji spinning top at the support area, or a likely support. It now needs to find a support. Now we want to see a nice bullish engulfing candle. Failing to see a bullish engulfing candle and we see a bearish engulfing candle, would see price reverting to the downside, and we should be seeing price trading back in this consolidated range. So it's imperative, if this is to be positive sentiment, we want to see price now finding support above a prior resistance area and for price to kick to the upside. Notice the histogram has been positive throughout this period on our hourly, and you can see the swing high, and you can see price where price is trading now at the underside, but still above the institution, which is still positive. The actual trend line has been broken. That's a negative signal, but we've seen that break, and price is still above the institution moving average. So give it a bit more time, be patient, and let's see if we can get a nice bullish engulfing candle here. Failure to see a bullish engulfing candle would not see price bouncing higher, and we should be targeting the upside. It would mean that we should be looking for further downside movement or consolidation, and then we'll see if we can target the low of this consolidated range and then the break, and then we could trade all the way down to 1266 again. Next up is sterling. Let's have a look and see what's been happening on the daily. Price yesterday almost bullish engulfing at 1585, and the 1585 is the institution moving average on this time frame. Quite clearly see, if I take away this horizontal line, that the institution moving average was in play. I did say if we want to see price continue to fall towards that magic 15800, we want to see price intraday finding resistance now at the underside of the institution moving average, and then we should be looking for those targets at the downside. That failed to materialize as price actually broke higher during the course of yesterday, and in doing so we've seen our price reverting to the upside, and this is likely to move into the 15900 now, which is our February tracement area. Okay, you can see prior resistance, breakout, price support, resistance now. So 5900 is our intraday support and resistance level. So in my 4 hour, I want to make a note of that. There we go, 5900. There's my 1585, which happens to be that institution moving average on our daily. You can see yesterday, and it's 1 o'clock on yesterday GMT in the afternoon, we had a bearish engulfing candle at the underside. Not a very genuine bearish candle nonetheless. We'd like to see less wick and more confirmation, something like that, a true movement away from an underside of a resistance area. That failed to materialize. What happened was we saw a bullish engulfing candle on the next 4 hour at 5 o'clock. That's taken us above, and since then price has actually just traded sideways until this morning. We've seen price moving higher. 5900 is where price needs to break higher. Get above that, then we should be targeting that all important 1600 again. So we've gone into a consolidated range on this pair on the intraday time frame. It's imperative for this is to be positive sentiment, and then we will need to see 5900 being broken as soon as possible. Failure to see that happening, we could see price now running into trouble. As you can see, the low swings on here, and you can see where price is trading right now. A lot can happen in 4 hours, so this is where the patience is really, really important. This candle will close at 9 a.m. GMT this morning. Let's have a look and see how this candle comes out, how she trades in the next 4 hours or so, which is a 9 a.m. GMT close, and see where she is from there. If she's still above 1585, look for further consolidation and only trade in the direction of the trend. You can see quite clearly on the 4 hour we are negative, so look for more negative sentiment to occur. The only thing that's really going to make us look positive is if we are trading above 5900 during the course of today. Otherwise, look for that negativity to the downside. Onto the Uso De Swiss Franc. There we go. Let's have a look at the daily. You can see quite clearly not too long ago in November we saw that breakout, the pullback, and then the continuation up to prior support and resistance level in the shape of the February tracement area here at 38.2. Now what's happened is price has failed to break that 38.2 here in the shape of the 950, and in doing so consolidating, and then we had a bearish engulfing candle, not a really great one, but anyway still engulfing the prior consolidation here, and price reverted to the downside yesterday, trading into that support at 940 and bouncing and closing indecisive. You can see price trading in the middle of the candle and a lot of wick on either side. So indecisive, but indecisiveness above the prior resistance, which is now potentially to be a new support. So we need to see a nice bullish engulfing candle. A bullish engulfing candle will cancel out the negative sentiment here and tell us that we are seeing people purchasing contracts of the US dollar against the Swiss franc. And if that's the case, then we should see 950 being back on as a target near term. So we want to see, if you are trading bigger time frames, a nice bullish engulfing candle here. That would tell us now that this is a genuine breakout, the pullback, and the continuation. People are really looking to still buy the sentiment to the upside. And you can see on my intermediate trend, I have a swing, price swing, higher swing, and you can see also on this time frame the institution moving average is below price, the 50 period moving average, and the 20s. So everything's looking positive. Histogram's looking positive. Blue arrow, blue candle, histogram on our side is telling me I should be looking for nothing more than buying sentiment, and the only thing that's going to actually cancel this pullback now is to see price now finding support, and that support should come in the shape of a bullish engulfing candle, engulfing the negativity we've seen the past couple of days, and that would confirm to me that this is now looking positive, and I should be targeting 950 first, get above 950, then 960, 968 and change, etc. to the upside. Last pair of the day is the US dollar Japanese yen. Let's have a look at this pair. Price been very positive on the past couple of days for the US dollar against the Japanese yen, and that has seen price now moving away from 80, which happened to be a major support and resistance level over most of this year. You can see from April this year, price finding resistance at the underside of it, And near term, we've seen price now buying into this area here and failing on prior occasions. The third occasion and the one that's happening near to price action right now on the hard right edge, you can see quite clearly a lot of buying sentiment in the past 2 days. It's really taken away all this negativity we saw just recently. 2 moves right up, and as long as it maintains above 80, then we should be looking for positive sentiment. Our histogram, even though in this negative consolidation here, was telling us we should still be looking for positive sentiment, and sure enough, she has actually given us that outcome. Swing high is telling us we should be looking for upside. Moving averages all below price, and most importantly, we are trading above a major support and resistance level in the shape of the 80. So now where's our next target? Well, you can see quite clearly here back in February and April of this year, we saw price taking a bit of a consolidation at and around the 81.50. If you wanted to put it here, you get there, but roughly I'll go for the 81.50 because it's a nice round number for starters. And you can see quite clearly price yesterday traded into that area and has now seen a pullback. People are taking profit now, and that constitutes the price actually pulling back. It's important, if you are in a positive upside move, to take profits when they present themselves. So look at 81.50 is a nice round number, and where price in the past has actually taken a consolidation or taken a break, and sure enough, they're taking a break near term. Breakout, taking profit here, price is pulled back. It'll be interesting to see where price is likely to take to actually, if this is still to be positive, we want, if you're taking the current low on our daily to the current high that we've seen here on this candle yesterday, we want to see price. You can see price is now testing the 23.6 Fib retracement area. So make a note of that, because that will become our intraday support. So 80, what do we got here? 80.90 intraday. If you want to take that and put that on your 4-hour and hourly, 80.90, 80.90. There we go. That's where price needs to stay above now in order to still be positive. Just remember, if price is moving to the upside, the more bullish it is, the less likely the price is going to be pulling back that much, or that far greater, because of the momentum behind that actual move. In this case, is moving higher, and you can quite clearly see here's a good example of that. Price actually broke higher, but the momentum behind it was so great that when we did have a pullback, the pullback was very shallow because of the fact that there was so much sentiment behind it. It's the same here. That's what we want to see in a very, very strong move to the upside. Is when people buy into it, we want to see the pullback being quite shallow, because that tells us that the sentiment overall in the move is still very, very much strong. And if that's the case, then we should be looking for price to take a small consolidation before we see a third attempt to the upside. Okay, so as long as it maintains above 80.90, look for opportunities to buy into this. So nice bullish engulfing candle here at the bottom, and then let's look for that all-important upside towards that magical 81.50 mark, as I mentioned, which is in our daily and weekly support and resistance lines. That would be a nice resistance target to the upside. So nice bullish engulfing here, and then target the upside for the remainder of today. If that fails to happen and we see price pulling back below 80.90, look for price to pull back all the way to potentially all the way to 80 again. But you can see quite clearly, if I take the low here, the start of this trend to the upside on my hourly chart, or sorry, the 4-hour chart, you can see the 23.6 is that 80.90 mark. Get below that, then we should be targeting the 38.2, which will bring us back to the 20-period moving average. 50, price support and resistance. 61, back to the major support and resistance level. You can see how all our price support and resistance levels are pretty much Fib retracement areas. So take that on board, guys. Be aware of it. Wait, be patient, look for the confirmation signals, and trade the outcome. Other than that, I hope you have a fantastic trading day today. Hope you have a better weekend with family and friends. Please look and see if there's any news out that's going to factor in your trades today. Very, very important to always be aware of the fundamental side of it. I know it doesn't really always give you the outcome. You know, news can say one thing and we could see price doing the total opposite. There's a lot of risk-averse trading out there, as the entire portfolio is looking risky. They're just traders out there looking for the vehicle the least risk attached to it. So fundamentals, just good to know what's happening when. It might not even move the market in the direction, even if the news comes out. That's just how things are playing at the moment now. That's pretty much run to risk-averse trading at the moment. So, but be aware of it anyway. Other than that, if you are following this particular template, please back it up with the money management rules that are required for it. There are 4 rules to this template. Please abide by each one of them. If you break one of those rules, you will not be successful. We've made it very mechanical because trading should be done very mechanically, and it's the beauty of this particular template, and the reason why it's been so successful over the number of years is because of the fact that you have to follow the rules, and if we apply it properly to the correct time frame or the actual pair, you can be very, very successful from it. If you want to know more about it, please visit www.sereneeducation.com for further details. If you'd like to talk to one of us, myself or Nikki, please drop us an email at info@sereneeducation.com and we'll get back to you as soon as possible. Other than that, have a great day, and I'll see you first thing on Monday morning. Until then, trade serenely.